Hey guys, good afternoon. It's Angelo, Christian Financial. Thank you so much for watching Real Estate Insider, our podcast. We've been actively lending in America, commercial and residential loans for over 20 years. I've done billions in lending, helped hundreds of thousands of people all over the country. And today we're talking about a really important topic: secrets to get a low mortgage rate. Are there really secrets? Yes, there are secrets and strategies. You better believe it to get a low mortgage rate. You better stay tuned, because at the end I'm going to release a bonus secret on how to help you to get the lowest mortgage rate to lock in. Who doesn't want a lower fixed rate? Everyone in America. If you're watching this video, give us a thumbs up if you want a low fixed rate. There are strategies and secrets that you can use to employ with your lender, with your bank, to make sure that you're getting the lowest fixed rate, so that way you don't pay a higher interest rate. And Angelo is going to share those with you guys today to make sure that you can get the lowest fixed rate. And these are the secrets that I've learned over the last 20 years of helping, hundreds of thousands of people all over the country to get the best interest rate. So basically, there's 5 of them. I have one bonus one at the end I want you to watch. So the biggest things that are important here is the first one, obviously, your credit. You want to have at least, ideally, and remember, lenders, they use FICO score 8 as their reporting module for credit. You want to have your middle credit score at 760 or higher. 760 is the highest tier 1 matrix for pricing for lenders. And you have 3 credit scores: Equifax, TransUnion, Experian. Ideally, you want to have that FICO score at least 760 or higher. The middle score on FICO score 8, I'm not talking about Vantage Score, FICO score 5, or any of those other modules. I'm talking about FICO score 8. And you want to have it at least at 760, your middle score or higher. The other thing is that you want to make sure that you don't have a bunch of inquiries. If you do, we have software videos in different places that can delete those inquiries. If lenders have seen that you've shopped too much, they may raise your interest rate because they think you're a risk. So if you have a ton of inquiries, that's not good. You want to get those deleted, because they may think that you're not able to get approved for credit. And a lot of inquiries will also help actually lower your credit score. So that's not good. The other thing that's also really important when lenders look at is your debt to income ratio. And ideally, you want your debt to income ratio to be below 43%. You can get a mortgage loan at a 50% debt ratio, 55% debt ratio, even with VA loans up to a 60% debt ratio. But what happens is, when you do that, it could raise the interest rate because you're more of a risk because you have so much debt. So you want to have your debt to income ratio below 43%. If you want to learn how to calculate debt to income ratio, watch some of my videos on my YouTube channel, learning how to calculate debt to income ratio. We got a ton of those on that topic. The other thing that's also really important is 3 months of reserves. Now, what are reserves? That's your mortgage payment times 3 months. If you try to get a mortgage loan and you don't have any reserves or any money in your bank, that looks like a high risk, and the lender could charge you a higher rate. So if you have more money in your bank account, more reserves, then they'll give you a lower interest rate. Okay, because what their concern is that if you lost your job, could you still make your house payment until you found a new job? So that's what the reserves mean. And then obviously, loan to value ratio. This is how much you're financing versus the value of the home. So lenders like a big spread between what the value is and how much the loan is. Because if you go into foreclosure, if the loan is very close to the value, it's high risk to the lender because they have to liquidate the property. They may lose money. So if you put a huge down payment, they'll give you a very low rate. Like if you put 40 or 50% down, they'll give you the lowest rate possible. For FHA, you just have to put 3.5% down for FHA. In conventional, you'll get a lower rate if you put 5% down versus if you only do 3% down. Okay, so to get a lower rate, obviously the more money you put down, the lower interest rate you're going to get. It starts with FHA at 3.5%. Conventional, you can get a conventional loan with 3% down, but you will pay a higher rate. If you can afford to put 5% down, put 5% down. Really important. And lastly, the bonus one, if you guys stay to the end to watch it, what's very, very important that you do, and I had videos on this topic, is you have to watch what the bond market is doing. Okay, particularly the 10-year Treasury yield. I have videos on when to lock your interest rate. Watch my video on when to lock your interest rate. But the 10-year yield, okay, that has a correlation with interest rates. So the 10-year Treasury bond, whenever that 10-year yield is going up, okay, the yield is going higher, that means that interest rates are going what? Interest rates are going lower. Okay, so when the 10-year yield is going down, interest rates are going up. So why does this matter? Well, let's say that you go to lock your interest rate that day and the Fed raises rates and the yield is going down because the rates are going up. That means that your interest rate is going to be higher. So you can just log in you can anywhere, Google Finance, Yahoo Finance, Bloomberg. You can just pull it up in your Google search, 10-year yield price today on Market Watch, and see what is the 10-year yield doing. If that rate's going up, there's 90% correlation with interest rates that those interest rates are going to go up higher too. So it's not a good time to lock your rate. This is a very, very important thing, because if the Fed's raising rates, it doesn't matter. These things aren't going to matter and push it as much, because now the Fed has raised rates, so you're still going to pay a higher rate. Okay? This is a really, really important topic. Right now, we're in it's the end of 2020. We're in an extremely low rate environment. And, doesn't really matter, but in 2021, nobody knows what's going to happen for sure with interest rates. And they could go much higher. So be mindful of this. And you can also watch my video on 10-year yields and when to lock in your interest rate, because if you lock in at the wrong time, you could pay 0.5% more on your interest. And on a $300,000 home, that's $150,000 in interest. So these are the most important things, the secrets to get a low mortgage rate. If we can help you, call or text our office at 832-431-6331. We're a national lender, commercial and residential, serving America since 2005. Let us help you. We do investor loans, HELOC loans, investor lines of credit, no-doc loans, jumbo loans, conventional, FHA, VA, USDA. We'd love to hear from you. Call or text our office at 832-431-6331 and check out my next video. Thank you. Bye-bye.